Today, October 9th, 2025, the market finally took a breather after a long, relentless rally that had investors feeling almost invincible. For weeks, stocks had been climbing higher and higher, setting new records and fueling optimism across Wall Street. But after hitting those fresh highs, stocks pulled back, a normal, healthy pause that often follows a period of rapid gains. This kind of pullback is a reminder that markets don't move in a straight line, and some volatility is to be expected. The Dow dropped 243 points, the S&P 500 slipped 0.3%, and the Nasdaq barely budged thanks to strong AI stocks that helped cushion the blow. While the numbers might look concerning, the overall market remains near its recent highs. Investors are nervous. There's talk of a possible government shutdown, uncertainty about what the Federal Reserve will do next, and the start of earnings season is adding to the jitters. All these factors combine to create a sense of unease. It's classic profit-taking mixed with caution. Many traders are locking in gains after the recent run-up, while others are simply waiting to see how things play out before making their next move. The market is weighing the promise of AI and new technology against the risks of political dysfunction and persistent inflation fears. These competing forces are making investors think twice before jumping back in. Down days like this shake out weak hands and set up stronger foundations for the next leg higher. It's a natural part of the market cycle, and often, these dips are short-lived. The real question is, are the companies you own still great? If the answer is yes, then these dips can be seen as opportunities to add to your positions at better prices rather than reasons to panic. Do your homework, look for quality stocks that have been unfairly punished by the market's mood swings, and get ready to buy when others are fearful. This is how long-term investors build wealth. Don't let one rough day scare you out of a long-term winning position. Remember, patience and discipline are your best allies in the market. Washington's shutdown is leaving investors in the dark. No jobs or inflation data, just guesswork. The Fed is flying blind too, forced to be cautious on interest rates without fresh economic info. Fed Governor Michael Barr says they're in no rush to cut rates, worried about inflation risks. Investors hate uncertainty, and right now, it's everywhere. With no government data, all eyes turn to corporate earnings, the ultimate truth test. The next few weeks, company results will drive the market. In this environment, focus on companies with strong fundamentals and resilience. Know what you own. Don't count on Washington or the Fed to save you. Even on a down day, AI stocks continue to shine as the market's brightest spot, drawing attention from investors and analysts alike. While other sectors may struggle, the momentum behind artificial intelligence remains undeniable, fueling optimism and excitement on Wall Street. Nvidia just hit another all-time high, propelled by a bullish analyst call and a major export win in the UAE. The company's relentless innovation and global reach are setting new benchmarks, making it a clear leader in the AI revolution. Meanwhile, Intel's comeback story is gaining real traction. With the launch of new cutting-edge chips and significant advances in manufacturing, Intel is proving it can compete and even thrive in this rapidly evolving landscape. The AI boom isn't just hype, demand is massive and the technology is already transforming industries from finance to manufacturing, healthcare and beyond. Companies are racing to adopt AI solutions to stay ahead. Some experts warn of a potential bubble, but this time, the profits and real-world demand are hard to ignore. The fundamentals supporting AI are much stronger than past tech frenzies. Still, investors need to be selective, because not every AI stock will be a long-term winner. Careful research and a discerning eye are more important than ever. Focus on best-in-class companies with proven technology, visionary leadership, and a track record of execution. These are the firms most likely to deliver lasting value. The AI wave is massive and only growing. Learn to ride it, adapt, and seize the opportunities, or risk being left behind as the next era of innovation unfolds. Froth and volatility exist, but the AI revolution is just beginning, with new breakthroughs and applications emerging every day. So pick your spots carefully, think long-term, and position yourself to benefit from the incredible growth that AI promises in the years ahead. Commodities are flashing warning signs and opportunities. Gold just hit a record, then pulled back. Investors are nervous about inflation and global risks. Silver soared past $50, driven by both fear and booming industrial demand. Oil prices fell after news of a Middle East peace plan, easing supply fears. Lower oil means relief at the pump, but high gold and silver show anxiety remains. Rare earth stocks jumped after China's new export controls. Supply chains are fragile. Commodities often signal shifts before stocks do. Watch these markets for clues about what's next. High metals prices mean investors are hedging against uncertainty. The story: safety, industrial demand, and global tension all at play. The market is a collection of stories. Each stock tells a tale of ambition, risk, and reward. Winners and losers reveal the real economy, reflecting the hopes and fears of millions of investors and consumers. Delta Airlines soared on strong earnings and booming travel demand, a sign of consumer confidence. As more people take to the skies, airlines like Delta become a barometer for economic optimism and the return of travel as a priority. Costco's sales jumped as shoppers look for value and bulk savings. In uncertain times, consumers flock to warehouse clubs, stocking up on essentials and stretching their dollars further. Pepsi beat expectations, but falling snack sales hint at consumer caution. Even as beverage sales stay strong, shifting habits show people are thinking twice about every purchase. Tesla dropped after a federal probe into its self-driving tech, reminding us that safety matters as much as innovation. Investors are watching closely, weighing the promise of new technology against real-world risks. The split is clear. People spend on experiences like travel and dining, but watch their wallets elsewhere. Discretionary spending is selective, and priorities are shifting. Discount retailers thrive, while some brands face pushback. Shoppers are hunting for bargains, and companies that deliver value are winning loyalty in a competitive landscape. In tech, trust and safety are as important as growth. Companies must innovate while protecting users, as data privacy and security become top concerns for both consumers and regulators. Don't just buy the market, pick the best, do your homework, and stick with winners. Smart investing means understanding the story behind each stock and making informed choices. There's always a bull market somewhere. Find it, and let your research guide you to opportunity.